Restaurant Brands International has announced it has bought out its partner's interest in Burger King China for $158 million US. Restaurant Brands also said it now owns almost 100% of Burger King's business and will look for a new local partner to invest in operations. For more on all of this, I'm joined by Robert Carter. He's managing partner at the StratonHunter Group and joins us from Toronto. Robert, thanks a lot for joining us. What is Restaurant Brands really doing here? Buying up its partner's interest in Burger King China. It now owns about 100% of that business, but is looking for a new local partner to invest in those operations and to become a controlling shareholder. So what's really going on here?
Yeah, Paul, great to chat with you again. And interesting move by RBI. And, they're buying out their partner, TFI, who helped them establish Burger King within the China market. TFI is out of Turkey, and they've grown that brand to about 1,500 units within the China market. So I think probably what's happening here is TFI may be looking at a bit of a focus back in Turkey. They run a number of different brands, may have got to a level where they need to have much more focused on a local partner in the China market, as it's a highly competitive quick service market.
So the partner being bought out is non-local. Is that an important part of this story?
I think so, yeah, because TFI out of Turkey has done a good job in helping grow within the China market. They were the first partner taking the Burger King from 60 to about 1,500 units. So, as the market in China continues to grow, a lot more Western brands are coming into that market, and it really requires a good understanding of the local market dynamics, as that market is really evolving and changing dramatically.
When Western companies in all industries establish a presence in China, they do so for growth. That's what they're after, is a fast-growing Chinese economy. How has this worked out so far for Restaurant Brands International? And how many of the company's banners or operations are in China? We're talking about Burger King now, but is there any presence there of Louisiana's Popeye's Louisiana Kitchen or Tim Hortons?
They have a great presence in China, particularly through some of the other brands. Obviously coffee in China is one of the fastest growing markets, and Tim Hortons is doing a good job there as well. So they have continued to expand within the China market through their different brands. But, when Western brands expand into China, it's one of the fastest growing markets globally. And they really like the Western brands for sure. But, there's a lot of Chinese brands that are growing as equally fast within the market. So the competition is becoming quite intense. And there are so many nuances of that local market that really it requires a local partner to help brands take it to that next level. So, 1,500 Burger Kings is really not that big in terms of the market size. So there's a lot of room to grow.
When we asked you what your thoughts were about this in anticipation of the conversation we're having right now, you said that digital integration, mobile ordering, and delivery options are really important here. Expand on that thought.
Yeah, for sure. I mean, you've got a younger consumer base in China who's very tech savvy, and we know that they have a number of different tech tools that help drive that consumer purchase, from the WeChat-based ordering to AI-driven personalization tools. So a much more defined market from a digital standpoint than what we experience here in North America. So, they're going to need to continue to evolve Burger King and RBI in Western brands as they come into this market that is really dominated by a younger consumer, dominated by technology.
For shareholders, how important is the Chinese is the Chinese business? How much of China is reflected on a day-to-day basis in the share price?
Yeah, great question. I think it's important as an emerging market for sure. I mean, we've got Canada, we've got North America, the food service industry just in Canada, North America, it will hit about $1 trillion as we go into 2025, 2026. But in terms of growth, it's relatively stable, I would say. So if you're looking from a global perspective, where should you grow globally? Obviously, India is a huge emerging market, and China is an emerging market. So if I'm a shareholder in a global brand, I'm looking for that dynamic to continue to expand in areas like China.
Robert, thanks a great deal for this, helping us out on a high-profile story today. Robert Carter is managing partner